Have you ever wondered why some traders can spot short-term trends faster than others? The secret? The exponential moving average.
The exponential moving average is a favorite tool for traders. It's all about identifying trends and making smarter decisions.
We'll show you how to use the EMA like a pro. You're going to learn what is the EMA, how to use the EMA, and why the EMA is a must-have in your trading toolbox. Let's get started. What is EMA? The exponential moving average is a technical indicator that gives more weight to recent price data, unlike the simple moving average. The EMA adjusts faster to price changes, making it highly responsive to market movements. This is critical for day traders specifically. How to calculate the EMA? The EMA is calculated using a multiplier that prioritizes recent prices. While most platforms calculate it for you, understanding the math helps you trust the indicator more. Focus on settings. Shorter periods like 9 or 12 are great for intraday trading, while longer periods like 50 or the 200 work well for identifying trends.
Let's take a look at the EMA as a trend indicator. Look at this Walmart chart. When price stays above the EMA, it signals an uptrend. Conversely, if it's below, we've got ourselves a downtrend. You can use EMA to confirm trends before entering trades. It's a simple but powerful way to stay aligned with the market. Watch out for EMA crossover. These crossovers occur when a shorter EMA crosses a longer term EMA, like the 50 period over the 200. Let's take a look at this chart of a firm. A bullish crossover is what happens when that shorter EMA moves above the longer EMA, and that signals a buying opportunity. Combine EMA crossovers with volume indicators to indicate and validate trades and avoid false signals.
Here's why the EMA is a must-have in your trading toolbox. EMA lines often act as dynamic support and resistance levels, helping you identify key areas for entries and exits. Let's take a look at this chart right here of Apple. As you see, early on in the day, as we hold that 50-period moving average, sure, we breach it a little bit, but there's room to get to the upside off that mark. It is a great support zone right there and supported by that pink line, the 50-period EMA. It makes you smarter and the trading decisions easier. The exponential moving average, the EMA, is a versatile tool that can elevate your trading strategy. Practice using it in your setups, and believe me, you'll see the difference.
Click here to check out our simple moving average video for more moving average insights. And don't forget to subscribe to TraderTV Live for all the live market action.